Hello, my name is Steve Bigelow with the Candlestick Forum. We see what the market trend is doing. It's in a strong downtrend. Is that because of the bank crisis? It doesn't matter what the reason is. We can see that the bearish investor sentiment is still in control. So whether you want to blame it on the Biden bank crisis or the raising of interest rates, it doesn't matter. What the investor sentiment is telling us is we're in a bearish J-hook pattern downtrend. Whatever the reasons are, do not mean a hill of beans. Bearish J-hook pattern on the NASDAQ. What is the investor sentiment implying? They do not like whatever the conditions are in the markets. So with that, there aren't very many bullish sectors. The bullish sector is the gold sector, which we identified because April gold, starting off with a bullish left-right combo, double bottom, gold has been acting very strong. This makes that sector, if you want to stay long in something, makes that sector the most viable. However, we can see what's happening in other sectors. The financials are getting obliterated. You can see that Goldman Sachs, after it hit this level and then failed to hold this level, they're selling off the big financials. Now, when they're selling off the big financials, that means the market is not going to go up. So things like XP, if this opens lower tomorrow, you've got a bearish J-hook pattern, and a lower open would give you a bearish doji sandwich, which would further confirm that bearish J-hook pattern. So when we can see Wells Fargo, all the big financials are selling off because of dumpling tops, that puts us in positions where we want to be looking for other dumpling tops, because here's our expectations. A dumpling top is a strong sell signal or a strong sell signal pattern indicator, because it's the opposite of the fry pan bottom. It's telling you that the bearish sentiment is building up until they start pulling the plug, and that gives you these big price moves to the downside. So when you see something like this, and you can see a dumpling top and then your doji, when you apply the doji rule, which says if it opens lower, it's going to do a bearish doji sandwich, continuing this strong downtrend. So basically, this is nothing more than putting all the assessment indicators together, that if you can see a pattern and you know what should happen after individual candlestick signals, it just dramatically improves your probabilities that if you're shorting stock, or if you want the ultimate entry option entry levels, this puts you in the right direction at the right time immediately. So identifying the patterns, like in Nordstrom's, we can see wave one, we can see wave two, and with the trading back below the T line and now gapping out or gapping down through this level, it tells you there's a good indication they're still selling this stock off pretty hard. So with that, join us Thursday night. We do free candlestick chat sessions. We're going to be working on specific option strategies. And that also puts us in as a setup for a full day option strategy training on March 25th, a full day on Saturday. They're scheduled to go for 4 hours from 10 a.m. to 2, but we never can do that. You'll be lucky if you get out between 3:30 and 4 o'clock that afternoon. Join us with a free trial in our chat rooms. You'll see the logic and the common sense built into candlestick analysis. You don't have to be a sophisticated technical investor. All you have to do is recognize what the Japanese rice traders have produced as strong bullish and bearish signals. That'll be it. We'll see you in the chat rooms.